Hi guys, Annette here. I am your licensed loan officer based out of Sunnyside, Newport Beach, California. Just wanted to reach out to you and give you a little bit of a heads up, a little bit of a mortgage shopping 101. I know right now with everything going on with the market, there's a lot of uncertainty, so surely one of the top things we recommend doing during this time is really doing your due diligence, making sure that if you're looking at a refinance, that it's something that makes sense. So what makes sense on a mortgage refinance? I would say top reasons include reducing your mortgage interest rate, a minimum of at least 3/4 up to 1 full percent, or lowering your monthly payment by at least $175 to $200 a month. Now, needless to say, while you're shopping, you'll see a lot of different advertised rates and programs. So it's a lot of information and overwhelming. But one of the key things to think about is what your new interest rate is going to be at and what your annual percentage rate. So the APR, that is an indicator of how much you're financing into your new loan amount. So that's the base principal balance plus any closing costs, prepaid taxes and insurance, third-party, non-recurring fees. So usually the larger the difference is between your interest rate and then your APR, means that you're likely paying points to get the lower payment. So that would be the top thing to look for. And number 2 tip I would say is to always make sure when you do get a quote from a lender, when you're shopping, you want to make sure that estimate's coming from the same day. Because market rates can be quite volatile. Sometimes we're seeing interest rates fluctuate anywhere from 3 or 4 times a day even. Now it's started to calm down again, I would say in the past week to a week and a half. So hopefully once things start reopening again and you get back to normal, that market rates will start to stabilize a bit more. But it's hard to say. So while you're shopping, I would say APR, making sure you get your interest rate quotes from the same date, and make sure you ask as far as the options available if you're looking at buying points, which is a buy down cost. So all that does is it allows for you to get the lowest monthly payment. So sometimes if you have a lot of business expenses or your income, you want to be able to take advantage of the higher tax write-off. A lot of times paying points may make sense because you get that write-off at the end of the year. You do your refinance once and you don't have to worry about it again. So that's just a one-time deal. So that's a nice benefit. And then for others, sometimes if you're looking at paying your house off faster, it might make more sense for you to take the cheapest loan because your break-even point is going to be shorter. So a lot of times that may be more beneficial for you. So it's just a lot of different factors to consider. So tip number 3 I would say is to really assess what your situation is, if it makes sense for you to look at paying points or just getting the cheapest loan option. So whoever you speak with, I always recommend to get a couple different options based on that scenario. And if you still have questions, I'm always an available resource. So feel free to send me a direct message, send me a quick email, and I'm always happy to help. Until next time, cheers!